Hey, it's Todd Ault and welcome back to Wall Street Words. Today's word is short squeeze, and wow, does this hurt. Let's say you're a trader or a hedge fund and you've shorted a stock. You had to go borrow that stock from someone else. We talked about that before. When you're shorting a stock, you have to go borrow it. When you have to borrow it, you sometimes have to give it back, right? When you buy it back, then you deliver back to the person that you borrowed it from. Now, let's talk about short squeeze in this manner. Let's say you're short a stock, meaning you're betting it's going to go down, and they have great news and it goes up. And a lot of people are short the stock, similar to something that happened to Tesla. 25% of the float was short. And when Tesla had good news, the people that were worried that it was going to go up because they were going to lose money had to buy it. So they squeezed the stock. As they purchased more, it sent the stock ever higher, and therefore more people got squeezed out and they had to buy back their shorts, and eventually the squeeze was on and the stock rallied into that short squeeze. Today's word is short squeeze, and it can be painful to be squeezed when you're short.
Hey, thanks for watching Wall Street Words. Please subscribe and hit that bell below. If you think this video adds value, please share it with somebody. By the way, if you want to watch more Wall Street Words videos, there's 2 videos right here you can watch right now. There's new videos every day. Thanks for watching Wall Street Words. Always great things happening here.